Going on, guys? What's going on? Good evening. This is going to be the DRC for Tuesday, the 1st of July. And what we're going to go over, we're going to stay focused on NQ today. That's going to be my main focus, just staying locked in on that. Kind of going over how others traded it, kind of going over obviously how we traded it. And I'm going to be getting you guys, if you just DM me as well right now, like I already have it, but I'm going to be getting you guys in the Telegram a DRC template to work off of, right? So you can actually follow along with kind of how I look over my day and then kind of look over my own setups and see where, I can increase my edge. So just to kind of remind you guys, if you guys are new or if you haven't seen these series so far, the first thing that we focus on is one thing that we improved upon that day. The second thing that we focus on is what did we actually learn that day? Did we learn something new, or are we starting to recognize a nuance or a pattern or something that we want to keep on the forefront? Number three is going to be changes that we need to make from today that we need to go into tomorrow and change. Okay. And then number four is just kind of an overall, how the day was traded, give yourself a grade. Obviously A, B, C, or D. How did you manage your risk? How did you enter? All those things will come with time. We'll talk more about those, but we'll just kind of keep it simple. Okay. So first thing I want to do is just bring up NQ. All right. I'm going to bring up NQ right here. And the main thing with this is just kind of showing you guys, like I've seen a lot of people selling today at New York Open, which I don't think was bad. I was actually looking to go long. There was lots of manipulation right at the open. So I was actually anticipating to see higher pricing. So I'm going to kind of show you guys really quickly how I go through it. Now, what I was first seeing when I first woke up, I like to look at the markets at around 7 a.m. So what I was seeing at 7 a.m. was this, right? All you could see was downside pressure from previous day lows, and price could potentially move into that demand level 22,700, right? Because we were already breaking down since overnight, and price had fell from 22.9, was already at 8. So it was just like it could fall another, 100, points easily, going into New York session. And the same thing looked very similar with ES, right? We had a very going below market open and stuff like that. That's very typical for us to see. And so um, now when you go into what we could see, you go back to 15. Right now, when the New York opened, that was the most important part, right? There was, I believe, a lot of people getting chopped up on the sell side here. Now, the reason being, and I think people get chopped up on this, is because one, there was manipulation right here at 8:55 to 9. This candle was crazy on a 5 minute and a 1 minute. If you were playing that live, what you know what I'm saying. And so one of the things that I really was looking forward to coming into New York was the fact that we had already taken that previous day low, right? This wasn't the actual low on the day, but this was that internal low, and we had taken it right here. So I was like, oh, okay, cool. Maybe we're gonna build, some demand off of this level here, right? On the 15 going into New York. Right. I was thinking, oh, okay, cool. This isn't an institutional candle. I'm just using the color. So thought we were going to build some, strength off of this to then attack this wick here in daily open and possibly, 22,900 and maybe HOD. Right. And so that's what I was looking forward to, happening as we were coming into New York, right? We really didn't have anything to see other than that. That's all we kind of had going into New York. So when New York opened, there was a time when price came down here like this before that flash. And I was actually looking to buy the positions when they were spiking down from 840 to 845 into the 15-minute demand. And then we essentially had a low of day, right? This was like the low of day at that point, right? It was like right in here. And so I was framing my risk. Where's it at? I was framing my risk off that low of day, right? And then looking to get up. And I only had like one contract on, and I was wanting to attack back up above where they had these highs, right? So 22,850 level. I just want to see if we could just reach above and go back to daily. And so when you look at it right now, what happened at New York is I ended up taking that trade. Price flashed down here. I still had a pretty good risk on the trade. It didn't take me out. Price started to show strength here, 9 to 905. This was 9:05 to 9:10, then 9:10 to 9:15, price exploded up, right? Showing more signs of strength, showing that it possibly could reach above 22,850. Now, this is where I believe, right, the internet or the inverse short seller trader was trying to find the setup, right? I don't think it was a bad setup, but when I look at it on a 5 and a 1 minute, I know how most people got stopped out. It's because most people, and this is just an opinion, and so it could be right or wrong, who knows? But I believe most people play the 1 minute time frame. Sorry. I believe most people play the 1 minute time frame and they were framing up the setup here, right? I believe that they were setting it up like this, trying to get like a 10-point risk, 20, 15-point risk or something on the trade. And then they ended up getting blasted right here at that 9:15 time. So for me, you got to think at the same time that this was happening, I had buys from the let's see here from the seven. It was like the 790s, 22,790 area. And when I seen this extension up, what I was anticipating was I had two contracts on by this point when we extended up, and I had moved one of those contracts here, and the other one was at the low of day, right, for one contract. Now at this point, price shot up and then started to come back down and took me out of one. I knew it was going to come take me out of the other. But why am I showing you guys this? Because the fact that most people got blasted on those shorts right here. But one thing I'm just kind of showing, if you do like to take those type of shorts, is use what's called an RSV, right? So you use a fast push-up candle, right? On the second candle, like so this is the sell side. So on the second candle on the sign of weakness, you can take a trade and put your risk at the top, right? Targeting the first structure break area low. And so, like I said, I already know a lot of people lost because it just took out a lot of stops, right, in this area and then sold off. Now, I used to be upset about this trade. I used to be upset about, missing that short. But because I know that these markets most of the time go up, right? I don't get as upset about missing a short, right? Because of something I've learned called a capitulation bounce play, right? And a capitulation bounce play, all it essentially is when shorts sell off super fast and there's liquidity drawn on or grabbed, right? There's going to be a short covering, right? There's going to be a situation where the shorts come in and they start to short covering essentially is when they have to come in and press the buy button, right? There's some people that do it manually. There's some people that, had lots of limits set on that 600 whole level psychological number. And so what we're anticipating is an easy snapback type of trade, right? And there's a certain way to read the nuances of this trade, which I'm not going to go into all the details, but I'm going to just kind of show you guys what we ended up doing. Now, I did take a loss to be able to experience this trade, which is, part of it because I got my signal and I acted on my signal. Now, the first time I had took a loss is when I got this 5 minute engulfing candle here, right, showing signs of strength off that area, and then I was wanting to attempt at 10:02, I believe is the exact time. I wrote it down somewhere. 10:02 is when I took my trade on the 1 minute. So I'll show you guys the 5 minute here as well. And so that was going to be right here in this push up here on the far left on the 5 minutes. So I took my trade at 10:02, right? Put my stop loss at the low of day. So my entry was like right in here, right? And I was anticipating that we were going to get back up into where they took out traders at that previous low of day, right? And so obviously it was wrong, took a scratch on that. And then I told myself I would be waiting for a little bit lower on the 1 hour demand, right? And I was either going to play the low end, right? So over here, the low end below 22,650, or I was going to play under the draw of liquidity, all right? Because I already know, right, how order flow works and when that draw on liquidity happens, what could happen. I'm not saying this is going to happen every time, just saying what could happen, right? And so we finally got this candle here. This is what most people do. I'm going to show you guys on the 1 minute. All right. Most people take this 5 and 1 minute trade and they don't realize what mitigation is, so they're getting mitigated, right? So you don't know that this is going to happen. You've had to take this thousands of times, right? Take the setup thousands of times on 5 and 1 minute. Now on that first rally up, most people aren't getting below the lows because if they did, like imagine how if you plot the 1 minute position down in here, they would have to be an amazing trade, right? So I like to wait for a shift and price delivery on the 1 minute, which that's what you get right here, which still gets me my 5 minute location, if that makes sense, right? Which all I care about the location for is because I have a specific risk placement and I want that to fit my game. right? So now this was the first setup on that first run up. Now imagine, I'm going to show you guys kind of how this worked really quick, okay? Show you guys how this worked. Let's see if I can do this. So actually, I'm going to do it on the 1 minute because I know a lot of you guys take the 1 minute trade. So I'll show you what it looked like, and then because I take it on the 5 minute location. Okay. Now how it looked was right here. You got price pushing up, and so that was the shift in price delivery. And for me, I'm going to put my risk at the low of day at that point, right? So you don't have to go two contracts. That's like my baseline when I start on micros. So bam, you go two contracts here, and then you have a risk of, let's just say that LOD. Now, where would your TP be in this situation? You have an option. You're looking at the 5 minute, right? You see, I'm looking at the 5 minute and that high because I know that if I'm short, let's take a guess here. I'm short, I'd probably trailed my risk down to here. That's just how I would do it if I was short, right? And so who could lose, right? If I was to win this buy, the trailing risk short players. So what I'm looking for is if price can't break past supply, then I need to trail risk and cover half the position, if that makes sense. Okay. And so that's what you're essentially seeing here. Price started to push off in our favor, right? And we failed to break, like right in here, we came up and we failed to break higher than the 5 minute, supply area. So right at this moment, you have two options. What I like to do is trail my risk up on one of the contracts and leave the risk on the second. That's just personally what I like to do. So let's just kind of think, I'm kind of showing you guys a hypothetical. So let's just say this, we're gonna buy, so we need to sell one of these because I ended up getting rid of one, right? So sell one. Oh, oops. Okay, so sell one of these here, so they'll knock us down to one. All right, so now let's just say that it came back for my risk hypothetically, right? So now I have one with the same risk. Now, this is where people mess up their 5 minute trade, right? To get the extension to go higher to where we ended up getting to inside the chats today, is they play the first 5 minute run up and they wonder what's happening when it slow corrects back. You're getting mitigated. Like that's the mitigation. The only reason that the individuals can't see this is because they only look at a 1 minute, right? So for me, I'm like, okay, cool. We didn't get above it, but if we come back into the 5 minute demand, why did I exit some of that trade when we didn't push that objective high? Because it makes me available to add more volume back into the same setup with the same risk. And I might actually, because if it pushes back in the right way, like it did today, it actually pushed my entry down to 22,623s, right? So let's see how this works, okay? So price comes back down. I still have one contract on the board. It's starting to break down, right? And there's no telling. It's just very hard to be on a 1 minute doing this, right? So that's the 40, right? And so now it's inside the 5 minute demand. At this moment, it's under my old price. So if I took another trade, people are like, well, why would you take a trade on and you have a losing trade, right? Well, that's the only way to get the dollar cost average to go down and make your trade a little bit better. So if you really feel like, okay, this is the area, and I started watching the 5 minute, I started watching, Top Step and just Rich Retail and just people saying that it's not going to go up from here, that's a perfect time to see those shorts cover. Okay. And so right here, let's say you added that contract back, right? So you bought that one back, but wait, let's just wait till you've seen some strength, okay? Because I know some people are like, okay, I got to see strength before I do it. So let's say, okay, now you decide to buy it back. See how it pushed you up, right? So that's why I like to just trust the 15.5 setup when I'm inside the demand and I'm putting my risk at that same place. And I'm going to start managing as soon as we break over the 5 minute high, over these trash highs. Look how trash they were on the 1 minute. Okay. So now you're added back in, you've got the same risk placement. And what you could do, right, is you could set another TP for here or here, right, on that 5 minute high, right, on the same move, if that makes sense, right? So bam, price is going, price is still going, right? You see what I'm saying? Bam, you're still in two. Bam, it delivers, right? Delivers the what is it, like a triple top. At that exact moment, what you can do, like with what I do, is I slide risk and I start to aggressively trail the trade. So let's just say hypothetically, like I said again, we did that again, right? So what am I gonna do right here as it broke that area? Sell one. Bam. Now I'm up 224 on the day. You have two options. You can leave your risk at break even, or excuse me, at the low of day, or you can take that risk and just trim it and close it down for the day and everything's a profit from this point on, right? Now, for me, when I see this type of move, that's what I usually like to do. And then I like to see if the 15, right, can go and extend and eventually break higher on the line graph than this area. And that's essentially what we got. Okay. And so that's what you ended up seeing, right? If you would have tied that trade off, I think you would have been okay to reach still up, new highs, right? New highs on that intraday setup. And then bam, right? We started to get a little bit more of a push, and then we ended up pushing up to market open. So you're still really good on this setup being break even, right? And then what we ended up doing when you start looking at the 5 minute on the trailing risk was when the market started making money available, right? We paid ourselves, right? So we were trailing risk, right? I kind of showed you guys how I ended up, taking some of that off and then we break even. And then as it started to move, we started to push everything up on these down candles, right? To secure a little bit more of the bag. Now, to kind of show you guys why we were playing up to this area, I'll show you here on the 15 before we close this out. And I like to look at the previous day high, or excuse me, the New York high and actually the high of day. Let's just go off the high of day to make it easier. So the high of day to the low of day, right? And when I see a capitulation bounce play, you might take notes on this, right? When I see a capitulation bounce play that draws in liquidity, you almost, I don't want to say all the time, but a good amount of the time, you're going to get a bounce back to the 50% of the swing of the day, right? Back to the, previous support level of the day. And it's almost like a golden setup, right? And so that's why I like to, basically say is don't feel bad if you miss out on the shorts because the capitulation bounce play is a lot better anyway. And you're in a market that if you're playing indices and futures, most likely is going up. Right. So just to kind of look at the future of what could happen for tomorrow, obviously we're holding support at 22,600 after the draw. We've really been fighting here in 22,650s. And if you really look at it, as you guys can already see, I have identified these are double tops from the previous day New York session, where it just seems like they came up resistance, right? Came down, came up resistance, more stop losses building inside the 22,850 level. And the previous day high, which would have been now the previous day high is going to be here, right? So let's mark the end of the day for tomorrow really quickly, and then we will be out of here when it comes to NQ. So this is going to be the end of the day tomorrow. So, they could go up. I would say this. Let's look at a 4 hour here, 4 hour, and a 1 hour here. We'll see what they do overnight, but if they just keep defending this 700 level and this 650s, right, and they keep showing signs of strength, I don't know if they're done yet, right? So I do want to see them kind of reach lower, but if, like I said, after they've delivered that liquidity, we'll see where London is, and we'll see if they hold that 650 key level tonight. But for me personally, I would like to see them continue this rally up and go back and take away those shorts from the New York player yesterday. So. I hope this helps you guys out. And seeing the setups, we went over very briefly, very quickly, the setup, right? And I showed you guys where I ended up taking that first L of the day and then bounced back and was able to build into that 15.5 position to secure. It was a little under like 130 points, 130 points getting back above market open. So hope this helps, guys. And then we'll be on not this week for live trading, but next week. So I'm just waiting on a few things and then making sure that YouTube is all set up that it doesn't lag or do anything crazy. So yeah. So I hope this, like I said, helps out. And then if you guys have any questions, just DM me Ciroc FX on Instagram. Give me 1 second here really quick. And then I'll do a little bit more extensive breakdowns when it comes to all the futures, but I just kind of wanted to leave you guys with this because I knew a lot of people shorted this market down and a lot of people got stopped out trying to short it. And then I know a lot of people, were hacking away at this before the draw on liquidity. So yeah, let's see here. Just trying to find where I put this. Okay, so cool. Just wanted to say this too really quick before we sign out of here. Is we have a short week, right? We do have a lot of news tomorrow. So tomorrow is pretty much the last full day. Then Thursday we have a half day. So there's only going to be the markets will only be open till 12. And if you do Top Step, It's only going to be they'll liquidate you at 11:45 a.m. Okay, so excited to see what we wake up to. Looks like we're gonna probably see some more upside and maybe some attacks on that 22,850. But that being said, I appreciate you guys watching the stream and let's keep it going.